All right. Well, what a fun and interesting fast markets there, ladies and gentlemen. Welcome to the morning recap. Just going through my clipboard here and just a few things that we're going to talk about. Was what was set up this morning for us in the equities and gold and crude oil. And I think we're mainly going to focus really on the house trade that we took close to the end of fast markets here this morning. There were some lots of other, some other trades, some wins, some losses, some smaller trades by our talented and professional traders that were on. We're just going to kind of focus, I think, overall on what was the major theme for this morning, right? So what was the market focusing on? We did have a couple of economic numbers come out. They could have been more impactful than they were. Very quiet as far as any escalations or anything going on overseas. And looking at the Nasdaq here, we see that the market really opened inside range and inside value from yesterday. Value area high yesterday on this platform, I think, takes us down to about 20,667 value high. Really kind of put in our high for the session today, up around 20,867. When we open inside of range and inside of value, most of you have probably heard me say hundreds of times, be patient, look for new information, and wait for the extremes to be established before looking for any real good opportunities. This is the 30-minute chart, folks. Look at the barcoding we've been doing since basically the open. The initial balance high 20,873, the initial balance low 20,722. Neither has been extended, and we are in a very range bound market state, at least for the early part of the session here today. How do we know that that's going to happen? We don't know. All we can do is make a hypothesis, and if that hypothesis rings true, that should give us a better opportunity or a better kind of strategy to trade a day like today. When we opened in range and value, I said I'm going to be patient. I'm going to wait for the extremes to be established. In other words, the initial balance high and the initial balance low, the range for the first hour of trade. And I'm going to focus on those extremes for the opportunities that I would be looking to take today. Now, focusing on the trade that we took in the house account, and Mo was really the first one in on this trade, and it was such a good trade. So here's the open, here's the IB high, here's the IB low. So now we're really looking at below value for opportunities and above value for opportunities. Dakota took a trade earlier when we had an opportunity. It was a nice little winning trade. There were some good trades taken today, but again, with the time we have, just going to focus on what happened with the house account trade today. Now, Mo took a beautiful long right down here at 20,745 when the market looked below value, couldn't take out these lows over here, got long. We joined Mo on that trade a little bit late maybe, but we ended up getting long on the same bar, really. We were long, and we accumulated longs of 5 contracts at approximately 20,762. The market gave us a degree of profit. So we took out 2 of those at 20,781. What the trade as I would be looking at it, and I think maybe others were probably looking at it, is if we're range bound, we're probably going to rotate from low to high to low to high. Look what we did already. We traded to the high, we traded to the low. We traded near the high, we traded near the low. We're trading back up near the high, at least the high of value, 2844 and a quarter approximately on this platform. So we take the long. We're long at 762. Our original risk, as I remember it, and I may be a little bit off on these numbers, but our original risk on this trade was 20,740. So we've got 22 points of risk times 10 contracts on that trade. The market gives us a little bit of profit. So again, we're out a little bit, at again 20,781, and the market pulls back. Comes, we come back to our basically our entry, uh, and and kind of leaks a little bit lower. Now, by this time, we have trailed the stop to below a short time frame swing low. which is a great way to trail stops. This is one of the things that I've always wrestled with in trading is trailing stops too close, trailing stops too quickly. If we're in a range bound day, a range bound trade, my tendency is to try not to trail stops to see if we're going to actually get the full rotation of balance that we might expect in a range bound day. We trailed our stop up to 751. That stop got taken, giving us a $90 loss on the entire trade. We took a small profit. We took a small loss on the trail. If we had left our original risk on the trade, 20,740, it was a pretty substantial risk. I think it was about a $1,500 risk on that. But if we were able to stay in this trade and we never hit the original risk on this, the potential for the profit, I believe, was worth the risk. You always got to make sure that the juice is worth the squeeze. If we were going to rotate higher, I would be looking for the market to rotate back near or to value area high, which on this platform puts us up to 20,843. Have we gotten there yet? No, but we are certainly at an area where we're better than 2-to-1 reward over risk. Now I would start thinking about trying to trail that stop. It was a good trade. It didn't cost much. Great risk management. That to me is one of the more difficult things in trading is to be able to accurately and correctly, if there is such a thing in trading, trail stops. In range bound trade, I try not to trail stops too quickly or too close. Take a look at look at the S&Ps. Now the S&Ps opened in range and in value yesterday. If you watch the end of the day, the we took a long up here because we were looking at negative delta, and my target was going to be 59.94, even if we were going to see that trade play out, which it did not, and that's okay. But it did trade out to that level, 59.94, even today, within 3 ticks. Still basically an unchecked point of control, naked point of control. That put in the high. The market rotates lower. We put in the low. Now we've got our initial balance. If we're expecting range bound trade, we're looking to buy below value above the high above the low, the IB low. We're looking to sell above value as close to the IB high as we can get. This is the IB high, not the IB low, because this is what the market is doing. It's just rotating from high to low to high to low to high. And these are the days in the pit. If I saw that we were in a range day like this with the initial balance high and low unpenetrated, I would be just raking in dough, selling it up against the highs, buying it against the lows. So the best trades I've ever made were simply because they were cheap against an initial balance extreme. And what about crude oil? What about crude today? So we had the range from yesterday. We opened inside range and value. This would have been a hard trade to take, but the opening range remains the dead ass low of the day. So when that happens, especially when we're close to important inflection levels, did we have any overnight inventory? Maybe we were still a little bit short in the hole down here. But when we see this and we're close to important inflection levels, and we've been talking all week about 70-10 weekly kickoff high, 70-40, a naked point of control, and last week's high at 70-49. When the opening range is the low of the day and we're close to these levels, you don't want to be looking for shorts anytime the opening range is the low of the session and you're near important inflection levels. If we were able to get into this, and what was the high and the low here? I think it was 72. Oh, what happened to it? There it is. 72. Yeah, 72 was the low of the opening range. 64 was the high of the opening range. A 12 tick opening range. If you took that opening range long and you could risk literally 20 ticks, if we don't take out the low of the opening range and hit that stop, you're risking 20 ticks to make, well, let's just say 87, to make 100 ticks on this, possibly, if you were able to hold it that long. And now, we're seeing a little bit of a breakout above an important inflection level. That 70-10. This whole area here, we talked all week. This is going to be kind of pivotal. We opened below it. We saw buyers come in. We're holding above it. It's accepting prices at higher levels, possibly go pick up some of the weaker upside structure, the weaker structure above price. I don't want it to, but we'll have to see. Now, Andre was asking why I think gold has been such a fascinating market. Well, it's coming into rollover, number one. Rollover tends to create range bound markets, and we're just at the very end, the very beginning of rollover. We saw this big move coming up, and this was a really good move. When we broke this head and shoulders, that was it. The market pulled back. We have excess low here, and we've been doing nothing but moving higher every day. And there's so much downs. There's so much weak structure down here. The market just continues to push higher and higher into rollover on lower and lower volume. That can be part of the issue. Part of a function of rollover is the front month is going to be losing volume, and the future month, which will be February, starts to gain some of that volume. Open interest also becomes very difficult to read. However, during the day sessions, there have been some really wonderful opportunities in the form of late spikes, failed downside auctions that have really provided some really good opportunities. I'm just going to focus on the late spike that we had yesterday at the end of the day. 26.7450 approximately was the base of the late spike. The market pulled back off of that, but when the market opens the following day above a late spike and certainly above the high of the late spike, it is attempting to mark acceptance of higher pricing. All right. Well, we open out of balance. Now I just want to get really kind of granular on this. So I'm going to go to the 5-minute chart. And Vince caught this trade. Coach Vince, and I don't know where he was long, but he was very, very patient in staying long wherever he was long. So the market opens. We don't close the gap. That's one sign. If we can't close that gap relatively early, we should be looking for opportunities for longs. Not just that, the IB low at the 720 open, it finishes at 820. So the IB low is 26.9110. The market looks below it and rejects. We have a failed downside auction. Some would call it a buying tail below the initial balance low. There's your first sign. Hey, we're rejecting lower pricing in the daytime frame. Maybe it's time to start looking for longs. Well, the longs have been getting paid. Now, IB high, initial balance high, first hour of trade, market breaks out above it, holds above it, never comes back to it, leaving single TPOs. I think maybe we finally no, we did. We left three or four little TPOs, little single TPOs above the IB high here, where the market is leaving excess below price. That is a sign that says if you're long in this, try and stay long as we stay above that IB high. And if you're going to be looking for longs, use that IB high and those little TPOs as a potential area for support for those longs. The market has continued to push higher. We know that Vince is now out of that trade. This market has just been providing very good, high quality, market generated information in the daytime frame for traders to use. Folks, I know that I've gone a little bit long here. We've got Trade with Topstep coming up. We've got Enrique, who is a recently funded trader. He's joining the show, I think, for the first time. Enrique was number 40 on the big board on November 20th, but unfortunately, since then, has lost that funded account today. We're looking forward to hearing Enrique's story on this. We've got Andre and Dolby joining him. Hope you enjoyed this recap. Everybody trade well. This is Topstep TV, and in honor of Andre, let's go.